Good afternoon. Henry Wheelwright, managing partner, co-founder of StablePoint Partners. Got a beautiful day up in Boston. It's Friday, November 8th, and I have a little pep in my step. Today's my birthday, 46, feeling blessed, feeling grateful, and as always, welcoming our clients, guests, and just general audience just to walk through the week. Of course, the election is the story. Big election on many fronts. Of course, acknowledge that if you look at the statistics, half the country was elated, the other half was extremely disappointed. Of course, a big divide in the political ideology, but here we go. We now know Donald Trump will be the next president, both the 45th and 47th president of the United States. It's quite a feat, only second time in American history. As we speak right now, Republicans have control of the Senate, still waiting to hear about the House, and it does have implications on the market. I think the first to talk about is what was the big reaction? This will be one of the best weeks in the Dow Jones if today's rally holds up in over 2 years. And I'll start with the political uncertainty and the implications to how the market was reacting coming into November 5th. As we looked at the polls that proved to be inaccurate, most expected it to be incredibly close, and not only incredibly close, but maybe a few days or more before we actually knew who won the election. So there was some money coming out of equities in the weeks leading up to the election. We started to see a much more defensive position by investors. And I think once we knew who the president was, not that the fact it was Donald Trump or Harris, we saw a lot of capital, that relief rally, money coming into equities. I think the big discussion points will be what happens in Congress, what policies, in fact, will Donald Trump and his administration be able to get through. And if you look at the market action, there's a couple things to think about. Number one is regulation, right? Over the last 4 years, the Federal Trade Commission, Department of Justice, and in general regulation on financial institutions and banks, IPOs, M&A activity had been somewhat constrained. I think there's a belief now, based on the policies previously of Donald Trump, that we'll start to see some unraveling of that regulation, probably a positive for the M&A IPO market. We saw a big rally in the major banks that correlated to a significant 1,500-point move in the Dow. The other is tariffs, right? Trump not only has run on tariffs, but if you look at his previous presidency and comments about China, we saw that in December of 2018. There was some wobbliness both in Chinese A-share stocks, but also U.S. consumer discretionary stocks, industrial stocks, or particular companies that may feel the brunt of Chinese tariffs. And I think that should be talked about. China actually, ironically, just unleashed a $1.4 trillion plan to continue their stimulus efforts. So that's something to watch. We saw some of the correlations between quote unquote Trump allies. Tesla has this significant rally on the wind given the relationship with Elon Musk. We saw some movement on clean energy stocks to the downside, given that was a Harris narrative and part of the Biden administration. Here's the story that we're telling clients. For a week or two, who the president will be may have direct implications on sectors. The real story is going to come down to where the economy is. Do we continue to see earnings growth to keep up with the valuations that have been heightened? And where do interest rates go? So glossed over, given the election results, was the Fed rate cut that we saw yesterday. Off the 50 basis point cut in September, we said a follow through 25 basis point cut. If you listen to Jay Powell, we're likely going to get another cut in December, potentially in January. And I've spoken in the past, some of our partners in research, Goldman Sachs Custody Solutions as one, thinks we may have cuts all the way through June of 2025. What does that mean? Jay Powell talked about trying to provide some stimulus and relief for the consumer by cutting the short end of interest rates. That implications are on auto loans, home equity lines of credit. We did see the 10-year Treasury move up. It had moved up about 80 basis points from the September 17th cut. We saw a 14 basis point move upwards just after the election. During my last discussion and weekly video, I talked about the fact that the deficit is likely going to expand. And that was the case whether it was a Trump presidency or Harris presidency. Typically, you see a lot of those policies and promises to voters come into spending and expansion of the deficit. And that's perhaps why we're starting to see the 10-year Treasury move higher. A little bit difficult for mortgage rates, and certainly that idea that we may get to affordability on homes. I want to go back to the Fed and also what investors should be thinking about over the next couple months. And I think the keys for investors still remain on valuations, trying to look for deals in the market that might be outside of technology, where we see price to earnings ratios much more reasonable when it relates to historical context. I think we will continue to see a rally upward, in my opinion. Goldman Sachs Custody Solutions again has a 6,300 target for the S&P, roughly 8 or 9% higher than where we are now. Just saw earlier today the Dow crossed through 44,000 for the first time. I think there's still a bullish sentiment, relief that the election is behind us. I think the first quarter of next year we'll really start to see what the presidential policies mean for the market. So it's stay diversified, pay attention to prices in the equities. The bond market should really present some reasonable risk adjusted and real rates in the next couple of years. So the bond market is a focus for our more defensive, diversified clients. And then, as always, Stablepoint Partners being an independent firm, forward thinking, financial planning based, and also looking at solutions in the private market. We really like the setup for a lot of areas in the private market, private real estate, private credit. And I mentioned the Trump presidency and opportunities to kind of unleash some of the demand that hasn't been there the last few years in IPOs. I think the private equity market for select investors, where appropriate, can be another opportunity. Again, huge week. Understand it was a very, very emotional election, big divide in political ideology, lots and lots of clients that had various views. So we're just looking for leadership in this country, remain bullish on our opportunity to be great advisors, and more importantly, build wealth for our clients. It's November 8th. It's my birthday. I hope you have a great weekend.